Nike has shed over $50 billion in market cap here in 2024, disappointing stock market investors. Now, investors are kicking the tires on Nike stock and trying to determine if it makes sense at current prices for long-term buyers. In this video, I'm going to evaluate Nike using the discounted cash flow valuation to determine what the fair market price should be for each share of Nike stock. I'm going to share with you where I'm getting all the inputs for this valuation so you can see for yourself if the numbers I'm using are accurate, too low, or too high. Without further ado, let's take a look at this valuation.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the numbers I'll need is the market cap, which stands at 115 billion. You can see that loss here from closer to 170 billion to start the year, now all the way down to 115 billion, as Nike has struggled with its strategy and leadership has changed as a result of the poor results. New CEO came in early October, and we've yet to see the results from the new CEO. Another one of the numbers I need is the number of shares outstanding, which is 1.5 billion. Nike has been buying back its shares at an aggressive rate, and management has indicated they will continue buying back shares for billions and billions of dollars over the next several quarters. The other number I need is the long-term debt, which stands at $9.01 billion, and the cash balance, which stands at $8.5 billion. I also need the estimated cash flows for Nike over the next several years, according to Wall Street analysts that are following Nike stock. According to those analysts, they believe the company will generate $6.6 billion in 2024. In fact, this is already completed. The company's fiscal year 2024 ended on May 31st, and it generated $6.62 billion in cash. For fiscal year 2025, the analysts on Wall Street are forecasting a huge drop in free cash flow for Nike at just $3.58 billion. In the company's most recent quarterly report, Nike highlighted that its sales fell by 10% and its operating income and cash flow fell by even more. And you can understand why the CEO had to be replaced because of these poor results. Very much disappointing shareholders, and shareholders were pushing for a change in leadership. Then they expect the company to return to growth in free cash flow at 4.46 billion in 2026 to 5 billion in 2027, and then another slowdown to 4.75 billion in 2028 before recovering to 5.27 billion in 2029. I also need the company's beta, which stands at 1.03 according to Yahoo Finance. All right, now that we have all the estimates and assumptions, we can jump into the valuation model. Starting with the 6.6 billion in 2024, you can see that forecasted drop to 3.58 billion in 2025, 4.46 billion in 2026, and on all the way to 2029. I pulled these numbers directly from the Wall Street analyst estimates. From 2029 to 2034, I'm forecasting the company's free cash flow will grow at a 7% rate during that transition period. Following that transition period, I forecast the company's free cash flow will grow at a 5% rate between 2035 and infinity. Sometimes I get the question, why do you forecast the cash flow at 5% when GDP grows at 3%? And so you're forecasting that Nike will grow faster than the economy throughout infinity, from then point to infinity. And the answer has to do with inflation. Nominal GDP is likely to be 5% in the economies that Nike operates. That's my estimate. So I'm forecasting Nike will grow at just about the rate of the economy between 2035 and infinity. Not faster than or slower than, but equal to the rate of increase of the economy between 2035 and infinity. And the reason I do 5% is because that's the nominal rate of increase. I'm not using the real rate of increase because Nike's cash flows will be connected to inflation. If inflation is faster than expected, then Nike's nominal growth will be faster as well. Nike can exercise pricing power. It has strong brand recognition. It's demonstrated that it can increase prices if there is an increase in the price level. So that's why I have it at 5%. So now we need to discount all of those cash flows to their present values because money in the future is worth less to us than money today. So the present value of the cash flows is $32 billion. Then we have the terminal value calculation. This collects all of the cash flows for Nike between 2035 to infinity. That terminal value is 152 billion. The present value of that is 58 billion, and the value of operations in sum is $90 billion. The weighted average cost of capital I'm using for Nike is 10%, applying a cost of debt of 7.5% and a cost of equity at 10.4%, using a beta of 1.03, a risk-free rate of 4.2%, and a market risk premium of 6%, a target capital structure of 10% debt and 90% equity, given the company has $9 billion in debt and a market cap of $129 billion. So to the value of operations, we need to add the company's cash balance, which stands at $8.5 billion, and subtract the debt of $9 billion. That arrives us to this calculation, the value of equity, which brings it to $90 billion. But we want to know the price per share. So we're going to divide the value of equity by the number of shares outstanding, which are 1.5 billion. And that brings us to an intrinsic value per share of Nike stock at $60 per share. Now, according to this calculation, it would suggest that Nike stock is slightly overvalued or roughly fairly valued if you compare it to the current market price. The current market price stands at $77 per share as of this recording. So you can understand an intrinsic value calculation of $59.95 would suggest that it's overvalued. Now, I do allow for a margin of safety here, so I wouldn't jump to the conclusion and say it's overvalued. And also, I use several different valuation methods to evaluate Nike stock or any stock. The discounted cash flow valuation isn't the only decision-making criteria I utilize. It's only one of many decision-making criterias. And in fact, I still have Nike stock rated as a buy, even though my discounted cash flow valuation model suggests that it could be slightly overvalued. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.